It is another week of What the F Happened. This is a weekly show that Steven and I do talking about the craziness going on in the stock market. And I'll tell you, today's show is going to be action-packed because it's been a effed up week out there. I mean, nothing, in my opinion, makes sense. Let's start with the big one that everybody loves to talk about, Bitcoin. Steven, what happened to Bitcoin this week?
I don't know. I saw we've got a big old drop. We fell below 30,000. We're getting a little bounce, but it goes back to it tracks the stock market. Isn't it supposed to be the alternative to the stock market? So we'll get into that a little bit today, I think.
Yeah, we're going to talk about how crypto and Bitcoin and Ethereum and Doge, all those got crushed this week, but we're also going to talk about why, because, it's important not to understand oh my God, Bitcoin's falling. What do I do? Sell. No, don't sell. Buy, because we're trading these very rhythmic patterns, and we're going to get into that. But before we do that, let's talk about the next topic, Steven. I think this is I thought this was a joke, dude. But, we all know that Monday we had a little bit of a rough day in the stock market. I don't know if you guys can see that. I'll try to make it a little bigger here. This is a Barron's article that was put up. And Monday, the stock market did a crazy ride down of about, it peaked at 900, but I think it settled around, 700 or 800 points down?
Yeah, 720 something, I believe.
720, which rattled people. They got a little bit nervous. Like, oh my God, is this that big thing, the next Great Depression that Chris Naugle keeps talking about? I'm just kidding. But the Great Depression is coming, and it's going to be way worse. But anyway, we won't get into that quite yet because I've got a hell of a rant that I'm going to go into. But here is Barron's comment to that. So right there, this is 155, Barron's stock alert. Stocks are down because Mondays are a lousy day for the market. I don't even know what to say, dude. I'm hyperventilating. What the F? Really? Mondays are a lousy day for the market? Oh, it has nothing to do with the government saying they're pretty much going to lock the country down again or make everybody wear masks and go back to it because the Delta variant is coming back and we're all going to die. And the unvaccinated should be fighting with the vaccinated. I'm not going to go into that, but none of that has anything to do with it. The reason the market dropped, according to Barron's article right here, is Mondays are just a lousy day for the market.
Drew could work for Barron's. He said it. He said it even better. The markets have a case of the Mondays. Absolutely.
But it's just a case of the Mondays. So anyway, let's see. Let's keep the comments coming back in. Drew, that's a good one, dude. High five. High five to all of you on Instagram commenting on that because that's freaking awesome. So let's go on to the next topics. Now let's get into some controversial things. Let's talk a little bit about the markets. How many of you think that the stock market right now makes any bloody freaking sense? Does the stock market make any sense? It's literally straight up. I mean, literally, Steven, I want to get into this a little bit, but I'm going to draw. I don't think I've ever done this, right? Warren Buffett's most famous quote, buy low, sell high, and don't lose money, is the opposite of what everybody does, which is buy high, sell low, and lose money. So if we're going to really look at this thing, well, come on, give me a free screen here. I'll just erase this. If we're going to look at this thing, I want to get into the weeds a little bit, and I want to get everybody's opinion. So if this was COVID, a 35% drop in the market, right? The markets went down 35% in a very short period of time. But then they bounced back, right? They came back, and now it's actually more like this. Does this make any bloody sense to anyone? Does it? I want your opinion. The endless wall of notes. I don't know what that means, Drew. Clarify that a little bit. But how many of you think that the stock market
You're bored.
Makes sense?
You're bored. The endless wall of notes. Your drawing board.
Oh, my drawing board? Yeah. Wow. So if this was just 2020 and this is 2021, and we've got this straight trajectory, does anyone think that this might be coming soon? When? Is it 1 year? Is it 2 years? Is it 3 years? Well, you know what? I talk to thousands of people online. We help a lot of people with our free videos that we do every Wednesday at 1:00 and on TikTok. And I keep talking about this. Now, I'm not saying you got to bail out of the market, but when I talk about what is to come, now, how do I know what's coming? It's so easy to see, folks. History repeats itself. Oh, this time's different. Bullshit, man. What world you live in? This time is no different. It's identical to 1926 to 1929. It's spot on. Look at the events that happened in 1926 to 29, more specifically 1929, and look at what's happening now. You see, here's what Kennedy Sr. would have said. Kennedy Sr., when he was getting his shoe shined, the shoe shine boy knew more about stocks than he did. And he took that as a sign to say, you know what, if the shoe shine boy is giving me stock advice, now might be a good time to exit. But he wasn't the only one that took that same sentiment. A lot of the big dogs got out of the market before the Great Depression hit. And a lot of them even shorted the market because they just saw the writing on the wall. And then you got to look to today. The big dogs are exiting the markets. Warren Buffett's, selling big chunks of his portfolio. He's buying some pharmaceuticals. Bill Gates selling massive chunks. Mark Zuckerberg selling massive chunks. And all the big economists warning that this is coming. And they're even warning you and telling you that it's going to happen in the next year to 2 years. But yet every single person, when I'm out there talking about it, whether it's privatized banking or whether we're talking about, U.S. Treasury bonds and different, safe havens for where to put your money, they're like, you're an idiot, or you're stupid, or that makes no sense. Put all your money in small cap stocks. That was the other day. Somebody's like, put all your money in small cap stocks. One of the highest risk stocks you can put money into. Like, if the market falls like this is what a small cap stock does. It goes straight down twice as fast. But anyway, we're not even going to get into the specifics on it. Every single person needs to really look at their needs, their goals, and what they want and what they can handle. And they got to decide, like, where is my exit? Where do I exit this madness? Because this is pure madness. And, the exit might not be right now. Maybe you have a set dollar amount. Maybe you want to wait till your returns hit 20%, which is purely greedy, but that's okay. You set your goals and then you exit on those goals. But too many people, when they get to their goal, I want to make 10%. Oh, the next day it hits 10% gain. Oh, wow. Well, I'm going to wait till 20. That is exactly how you lose money. And the funniest thing, I want to talk about Monday's market drop, right? Monday's market drop. So let's just kind of go over here and let's just talk about Monday. We had, if this is the market, we had a little drop. Okay, it was about 800. We'll just call it 800 points. If you lose 800 points, then everybody yesterday when the market was up, what did it finish up yesterday, Steven? Do you remember?
550,
500, right? So we lose 800, okay? And then we make back 500. And then today, let's just say we're gonna speculate that we're gonna make back another 200. Like, are you even? Are you even? So actually, let's say today does 300. Let's just keep the math simple. Let's just say that. So most people would look at this and say, oh yeah, the market fell 800 points and it just came back 800 points in 2 days. Are you even? How many of you think you'd be even by the math? Let's see. Can anyone tell me, like, if you lose 800 points, and let's just say you're all in on the Dow Jones, I'm just pick one index, you lose 800 points, and then all of a sudden the market comes back 800 points, is your account back to where it was? Well, if any of you are saying no, you are 100% correct. You are not back because of the drawdown effect. You wouldn't need to make 800 points to get back to 800. You might need to make 820 points. I don't know the math, but there's a drawdown effect. It's right here, folks. This is the drawdown effect. It just says if you lose 10%, you got to make 11. If you lose 20, you got to make 25. If you lose 30, you got to make 43. This is what people don't know. This is what people aren't talking about. People only want to talk, yeah, well, this stock has averaged a rate of return of 25%. Well, let me go into that. Steven, you've seen this one before, right? The 25%. This is the biggest load of shit I've ever seen in my life. So how many of you would be super excited if you looked at an investment that had an average rate of return of 25%? How many of you would be into that? You'd be like, oh yeah, that's freaking awesome. The average rate of return over, let's just say 4 years. Well, let's dissect that. Let's talk about how that works. Let's say you put $100 into an investment and I make, I don't know, let's just say your advisor makes you a 100% return. How much you got? You got $200, okay? Everybody following me? You put in 100, you made 100%, so now you have 200, okay? The next year, you put in 100, but you lose 50%. Actually, here, let's just keep it all the same. You put in 100, you grew to 200, okay? You didn't put any new money in. Your 100 grew to 200, but now you lose 50%, okay? You lost 50%. How much did you lose? $100. You're down to 100, okay? Follow me. Now, the next year, your account Starts at 100, but then you make another 100% return. Your account value is now $200. So you made 100, or you had 100, you made 100%, you had 200. You lost 50%, so your 200 went to 100. So then third year, you start with 100, but you make 100%, you're back to 200. Okay, one more year. Remember, it's a 4-year rolling average rate of return. The fourth year, you lose 50%. And this is not assuming any taxes. This is assuming no financial advisor fees, no mutual fund fees, no ETF fees. This is just raw numbers. So you lose 50%. Okay, so how much money do you now have? Well, you started with 200, but now you lost 50%. You're back down to 100. You started with 100. 4 years later, you're back to 100. But what was your average rate of return? If you guys do the math, that is a 25% average rate of return. But how much did you actually make? Zero. You made nothing. You started with 100 and you finished with 100. How many of you really like average rate of returns now? Well, you know what? It's a big lie, folks. It's what you've been taught. Sorry, I didn't mean to go into that on what the F, but you guys got to wake up. And I don't care whether you like it. I don't care whether you're one of our haters. If you don't understand the math, go back to freaking school, because this is what the F happened, and that just happened. All right. Got that out of the way.
Yeah, and it's not it's pretty crazy too these days that 800 points is only a 2% drop in the Dow. Like the stock market is just so high right now. I mean, imagine 15 years ago when your advisor, Chris, if the market fell 800 points, that'd probably be a 20% drop, you know? It's just our numbers are so high now. It's wild. And the other precedent I feel like this is setting is 800-point drop. Everyone's like, do I panic? But then the next day, the next 2 days, now we're up above that again. So it's just people are going to start realizing whenever there's a drop, it's just going to rebound anyways and come right back. So they're not even going to care and they're going to stop paying attention. So whenever these things do start dropping, they're just going to start thinking in their heads, no, it's going to rebound. It's going to rebound and rebound. And then what's going to happen? Oh, it's too late. You're going to burn. You're going to lose everything. So I just feel like this is just setting really bad precedents right now.
I think it's just a big game because you know what? The markets can be driven by institutions. You saw how Reddit was able, with combining people, and doing everybody's focus on GameStop or AMC theaters. You were able to move those. Like, do you ever think that this is a big game? The market falls almost, 800 points. The next day it rallies 600. Everybody just shrugs off what happened. You know what that is called? Does everybody know why that happened? It's not fundamentals. Oh, the next day fundamentals are all of a sudden better. Forget fundamentals. Warren Buffett invests on fundamentals. Nobody's investing on fundamentals. Otherwise, you wouldn't be buying anything. So what is that? I'll tell you, it's the most dangerous thing in the markets, and it's the same freaking thing that happened in 1929. It's called investor confidence. Because of what you just said, Stephen, there is so much investor confidence because of what you just saw. Oh, it dropped 800. It was down 900 at the high point, but it'll rebound tomorrow. Oh, it did. See, I was right. You're right until you're wrong. Like Mike Tyson says, everything's good until you get punched in the face. Same thing. Everything's good until you get punched in the face. Well, do you want to wait to get punched in the face? How many of you want to sit there and take your gamble and then, get in a ring with Mike Tyson? You're saying, well, maybe he'll hit me, maybe he won't. You want to get hit? I don't want Mike Tyson punching me. I'm sorry, I don't. So why wait? Just make your exit, plan a different strategy, figure out how to take your gains and keep them, because that's what the wealthy know. The wealthy don't just know how to build and become wealthy. They know how to freaking keep their wealth. Buy low, sell high, and don't lose money. Stop being stupid. Stop buying into the euphoria. But let's go into another euphoria that's been pretty interesting. Bitcoin's such a popular thing, and this is right on CNBC. A viral video shows Malaysian police destroying 1,069 Bitcoin mining rigs with a steamroller. Holy smokes, man. Now we're freaking using steamrollers. What are they trying to send a message out? Look at that thing. Destroying all those servers. Goodbye. Why? Folks, they're just trying to send a message saying, you know what? We're the government. We want control, and we're going to take control whether you like it or not. Now, using a steamroller to roll it over is a little bit drastic, but hey, whatever. They seized 1,069 Bitcoin mining rigs, and then they run them over with a steamroller. Weren't steamrollers meant to do roads. I bet you Malaysia's got a lot of really crappy roads, and people need to, really kind of start rallying up saying, hey, why don't you fix the roads instead of running over these servers? What are your thoughts on that?
That's crazy, man. I don't know anything about Malaysia, but it's, we forget how good we have it in the United States. Even when they're trying to take all our control and everything right now, it's still, we have it better than anywhere else in the world. It's still the freest country. It's still the greatest country. And it's still the most opportunity in this country than anywhere else in the world. It just, you start to realize that when you see things like that,
Yeah, it's the, as I always say, the nicest house in a shitty neighborhood. The whole world's a pretty crappy neighborhood, but it's the nicest house. But what the F happened, a weekly review of the markets where we do rants, we do raves, and sometimes we piss some people off. But that's just part of it because, hey, you don't have to agree with us. You don't have to like us, but you got to sometimes really think about it. That doesn't make any freaking sense. You're absolutely correct. And there, Drew is committed. He said, I might. Sometimes we just got to commit a little more than that, Drew. So no mights, just do. Right? Do it, man. Just do it, as Nike would always say. And all right, the final thing we're going to go into is how we always wrap this show up. And this is pretty drastic, Steve. And I know we don't really put too much emphasis on this, but this one's worth talking about this week, the fear and greed index. So let's get that up there and let's look at this thing. So if any of you have been following this show, you will notice that the fear and greed index last week was about right here. Like, look at that sucker. Extreme fear. Oh, I like that. So let's talk about extreme fear. I got one final thing. Bitcoin, last I just checked, which is before the show, is at about 29,000, down from a high of, I don't know, it hit a high of 60,000, but more recently it was in the mid 30s. And it's
back over 32.
Yeah, 32. And I actually went below 30. So all I can tell you is I follow a lot of economists. And there's a bunch of economists talking about Bitcoin. And I don't care whether you invest in the shit coins or, Ethereum, but let's just talk Bitcoin because it's the big one. So they all see these patterns. And now you can really see it. It's very easy that the pattern is going from 30,000, 29 to 30, up to 40,000. That's the pattern, the support and resistance levels. So if any of you are watching that and getting scared, because clearly there's some people getting scared, extreme fear. I bet you a bunch of people are bailing out of Bitcoin, selling high like they always do and losing money. But for those of you that are smart, you should really study it and look at it and say, you know what? Is this a buying opportunity? Because sometimes when everybody else is running, when there's blood in the streets, extreme fear, that's exactly when your ears should perk up and your sniffer should start looking around. Where's the deal? Where's the deal? You sniff out the deal. Well, maybe there's the deal right there. Because 29 grand, and I know it was up 5% this morning, but that might not be a bad entry point. And you ride that sucker to 40 and you exit at 40 and you just keep playing that game. Now, if it goes to 60, don't go getting greedy because you know what happens when that thing right here moves from extreme fear to extreme greed. You really got to look at your exit. When others are greedy, be fearful. And when others are fearful, be greedy. Yeah. So that is a great way to mentally prepare for what's going on, but don't play the long game right now because you will get burned. And you know what? When you're selling, guess what? I want you to remember this. When you're selling and you're scared and you're like, oh my God, I just lost so much, we're buying. Just always think about that. So if you don't want me to buy your stuff, then don't sell when it goes down. Buy when it goes down. I hope that's some good advice for people.
Well, and the other thing is, what drives these markets right now? And it's all news cycles and it's all, events that are happening. There's no fundamentals anymore. So another, thing to look at if you're a Bitcoin fan, why it might be a good time to pick some up right now is we're at the bottom of that $30,000 to $40,000 range. And there's also a big conference going on right now called the B word, which is how institutions can embrace Bitcoin. And the speakers at it are Elon Musk, who just got almost all his Tesla profits wiped out because of this last drop down to 29,000. So he's there pushing Bitcoin. We got Jack Dorsey of Twitter there pushing Bitcoin. He's a big proponent of it. I'm sure owns a bunch. So he's there trying to show how institutions can embrace it. And then Catherine Wood. So it'll be interesting to see if this conference going on right now, if that starts to drive the price up a bit right now. Again, this is all news cycle market that we're in. So we'll see.
Well, we've covered this before on What the F, and you can always check out previous episodes on my website at chrisnaugle.com, or they're all on YouTube. You can always check them out, watch them. But we did talk about that. We talked about Elon tweeting, and then all of a sudden, whatever he's tweeting about skyrockets. Whether it was, Bitcoin, he said, "Oh, we're going to accept Bitcoin to buy our cars." Then all of a sudden, he's like, "Oh, nope, hey, guess what? We're not going to accept Bitcoin anymore because it's bad for the environment." Just like, we got a case of the Monday blues. Mondays are just a crappy day to trade the market, I guess, and that's the reason the market goes down. So now nobody's going to trade Mondays. Everybody's going to, Mondays are bad. Let's trade Tuesdays until Barron's comes out and says, "Hey, Tuesdays are a really bad day to trade the market. Then we're going to trade Wednesdays." And eventually, I don't even know what Monday. It's just such nonsense. It's kind of just like, folks, just take your money and just throw it out the door. Like, that's what's going on. And I hope it doesn't happen to you. But folks, I hope you enjoyed this episode of What the F Happened.
Love it, man. Stay frosty out there.
Stay frosty out there. California, New York, Jersey, wherever the hell you're at, stay frothy. All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel. And don't ever forget to smash that alert button. We'll see you on the next one.